Bitcoin halving is upon us. What is it and how may it affect the price? I'm Lisa Bernhard with Reuters, and here to talk about Bitcoin is Ben McMillan. He's Chief Investment Officer at IDX Advisors. Ben, so Bitcoin halving is happening this week. Let's just start very simply. Describe what it is.
Yeah, so the halving is a pre-planned process of how Bitcoin is released into the world. So Bitcoin, of course, is a decentralized network of nodes or computers. The utility of Bitcoin is, in fact, that it's decentralized, and these computations aren't happening on any centralized set of servers. However, they are happening on computers. And in turn for providing computing power to compute those computations that allow Bitcoin to be sold in a permissionless way from one user to another, they are rewarded with these mining blocks, and so that's what the Bitcoin miners are. Now it's important to remember because a lot of people hear about the halving coming up, and they think that it's existing supply. It's future supply coming online. So this will be the fourth halving. There's been three, and it's important to remember that 95% roughly of all Bitcoin are already in existence. So we're talking about the future 5% that have yet to be mined, and the supply at which they're coming online is going to be cut in half. So this isn't going to have as big a price impact structurally as it has, the first couple of times around several years ago. However, it is going to impact the Bitcoin mining community.
There are a finite number of Bitcoin, 21 million. Remind people why that is and when that will all be mined.
Yeah, so that was one of the original utilities of Bitcoin, was that it was finite in value. And if you go back to the original Satoshi white paper, the authors actually referenced the great financial crisis and the fact that quantitative easing, that the government was printing dollars as a reason for keeping the amount of Bitcoin finite. And so the last Bitcoin is expected to be mined sometime around 2040. So, call it 15 years from now. And so again, it's the last 5% is going to come over the next 15 years. And one of the big value propositions of Bitcoin was that it can never be printed away. And in fact, we've seen a resurgence in popularity of Bitcoin since 2020, when we had the last bout of monetary and fiscal stimulus. And a lot of investors, even those that had kind of eschewed Bitcoin as a quote unquote asset class up until that point, are starting to come to grips with the fact that, the fact that it is finite in value and is decentralized and therefore can never be controlled or printed is something to take a closer look at.
We've seen the price of Bitcoin rise recently, although it's down a bit from recent highs, and that was largely attributed to these new spot Bitcoin ETFs. So is that also in part why you don't expect to see the price spike as much with this halving?
Exactly. I mean, one of the big things that's important to remember with the halving is that this is pre-planned. So everybody knew that this was coming. Now, historically, you have seen the price rise coming into the halving and in the months after a halving. But again, historically, the halving has had a lot bigger impact on the future supply of Bitcoin, because just by virtue of the fact that fewer of them have been in the ecosystem. This time around, I think in particular with the excitement around the spot ETFs, candidly, even the excitement around AI and all things kind of, innovation related, we saw an early bid for Bitcoin that's been very powerful all year long. And I think now the markets in general, but Bitcoin markets in particular, are starting to contend with the reality that interest rates are going to be higher for longer. That is repricing risk, and I think that's part of the short-term weakness that we're seeing here in Bitcoin.
Let me ask you this. What do you say to potential Bitcoin investors who are concerned about mining's massive carbon footprint?
So it's a fair question. It's one that's been around for a long time. There's arguments on both sides. So critics of that argument would point to centralized computing, and they would say, computers are just a fact of life. If you look at, AWS or Google Cloud, there's a huge carbon footprint associated with that. There's been studies done that every time you do a Google search, it requires the same amount of energy as boiling a kettle of water, things like that. So I think, Bitcoin is an obvious and very large user of electricity. And one of the things that we've seen as the mining industry has matured is alternative uses of energy. So the Bitcoin miners have actually been very much in the forefront, particularly at the larger level. The big corporate miners have been at the forefront of starting to lower their costs by going green. So things like geothermal, things like solar. You look at some of the bigger publicly traded mining companies, and they were very early to strike deals with some of the larger Scandinavian countries to use geothermal electricity in exchange for venting heat from their miners into things like greenhouses. So, really creative ways to lower their carbon footprint, lower their cost of electricity, in a kind of neutral fashion. Now, that said, Bitcoin does still use a lot of electricity, depending on who you ask and, what the calculations are, it's the equivalent of a small country. But again, I would tell people that, that's the same as with any large, cloud-based technology organization as well. Bitcoin is just a little bit more conspicuous with its energy use.
Explain other ways to invest in Bitcoin, such as the picks and shovels approach.
So this is a very good question, and this is one that we've heard a lot from the early days. We've heard a lot from kind of early skeptics that say, well, I don't necessarily see any value in Bitcoin, but I like the so-called picks and shovels play. And so that was a lot of the excitement that you saw and continue to see around things like Web3. Now that's moved into tokenization, so-called real-world assets, which we're starting to see a lot of, not for lack of a better term, hype around that narrative. BlackRock has been kind of at the forefront of starting to, push forward progress to tokenize real world assets. And so anything around that ecosystem, aside from just speculating on a Bitcoin or a crypto asset in general directly, buying a Bitcoin, buying an Ethereum, there's a whole ecosystem to power utilities and apps that are adjacent to or built on top of these blockchains that represents the picks and shovels layer. And so that could be anything from alternative coins, things that represent protocols, or layer twos. There's decentralized applications that facilitate things like lending, the same types of functions that banks provide. So you can invest in tokens of those protocols and therefore have exposure to utility built on top of blockchains. You've also got companies now, you've got ETFs out there, that are investing in companies that are associated or adjacent to blockchain technologies. So those are, I think, some of the kind of clearest and clean cut ways for investors to get access to the so-called picks and shovels layer.